Hi there and welcome back, traders. Thursday did not disappoint. Fresh highs, powerful breadth, and a handful of eye-popping movers. In the next 10 minutes or so, we'll break down the tape, spotlight the big catalysts, and map out clear trade plans for Friday. Let's buckle up and jump straight into it. So what happened yesterday? So let's take a look at our key figures first. S&P 500 up 0.8% to $6,502.08. The Dow up 8% to 45,621.29, and Nasdaq up 1% to 21,707.69. The Russell also finished up 1.3%. Buyers showed up across the board with strength into the close as rate cuts hopes stayed intact after softer labor signals. That combination with easing yields and good enough data was the fuel. So our macro tone for today, why the tape rallied, essentially there were two main drivers. Data didn't scare the market. It kept rate cut odds alive, so duration sensitive growth names could breathe. Yields eased from this week's spike, removing pressure from high multiple tech and unlocking a broader bid. The result? A risk on close, with the S&P locking that new high ahead of Friday's jobs reports. Alright, we took a look at Alphabet yesterday, and I'm glad we did. So, Google is still riding the afterglow of its legal win this week. That 9% surge reset sentiment around megacap and AI plays and lifted the comm services complex. Even with consolidation today, the overhang is lighter and the dips are getting bought. So super interesting. And I need to jump into this article now on Yahoo Finance too. So Salesforce, the outlier, dropped nearly 8% on a cautious revenue outlook that implies longer paybacks on AI investments. So it's a great company, but the message was not yet, and the market penalized delay. Alright, so take a look at that article if you get a chance. And lastly, spot gold remains near this week's record highs above $3,500 an ounce, keeping miners in play. A couple different all-time highs right now. Anyway, the bottom line, tech leadership rekindled, one mega cap wobble by CRM, and a steady safe haven backdrop with gold. Alright, let's talk about some standout movers, where the juice was. So I'm going to go into Trading View now, taking a look at American Eagle Outfitters, ticker symbol AEO. So AEO exploded around 38% on upbeat demand and high impact marketing wins. That's a genuine re-rating day. Momentum traders love these because follow through is common if day 2 holds the gap. So this is going to be super exciting to keep an eye on today, traders. Alright, then taking a look at our second standout movers. Ciena, ticker symbol CIEN, that's it. So Ciena ripped around 20% on a 29% year-on-year revenue jump and strong margins. Clean print, clean reaction. This is an earnings power story tied to the data AI traffic that we were talking about. So take a look at that, 23%. Beautiful. Alright, traders. So now we're going to look at some trade plans for Friday. Before we take a look at our hot stocks for Friday, just wanted to mention that this would be a good article to take a look at. Talking about Ciena's revenue for Q3, all the numbers are in, and we can make some informed decisions with this information. Alright, hot stocks, let's talk about it. So first one, we're going AEO, just like that, American Eagle Outfitters. So the bull path for AEO, we're looking at day 2 momentum or gap give back. Bull path, if it holds above the gap base, first 15 minutes low with rising volume, Then we're going to scale long. First targets yesterday's HOD extension, trail stops under higher lows. Then for a bull path, early pop that fails VWAP, then undercuts the gap base, fade back towards 50 to 61.8% gap retrace, cover into prior congestion. Alright, now let's take a look at Ciena, ticker symbol CIEN. So with Ciena, we're looking for strong earnings continuation. A bull path would be opening pullback that respects prior breakout zone, then reclaim of VWAP with uptick in volume. This is a continuation long, target measured move of the earnings range. Risk line, if we lose VWAP plus heavy volume, reduce or exit. Earnings winners can retest deeper before the next lag. And I think let's do one more today going into Friday. CRM was looking interesting. So a reaction low or a dead cat. For a bounce trade, if CRM builds a higher low above today's panic trough and reclaims VWAP, tactical long into the prior breakdown gap with a tight stop. Continuation short, weak opening bounce that stalls under yesterday's breakdown shelf, short with stop just above the shelf, cover into prior day's lows. Alright, let's talk a little bit about risk tape reading and tomorrow's catalyst. So remember, Friday brings non-farm payrolls. First 60 to 90 minutes can be faint heavy, so let's plan like a pro. Firstly, size down on the open, let the post data trend declare itself. Use VWAP plus opening range to avoid being exit liquidity, and prioritize A setups with clear invalidation. Treat CRM as a tactical, not a thesis. Quick lesson, trade confirmation, not headlines. If the story is right, the tape will prove it within minutes. Alright, let's wrap up today's video, traders. New high for the S&P, tech revived, gold steady near records, and single name fireworks in retail and networking. For Friday, AEO for day 2 momentum, CIEN for earnings continuation, and CRM for a disciplined reaction trade. Stay nimble, respect risk, and let price action pay you. Alright, thanks for watching the video again today. I look forward to seeing you again tomorrow. Happy trading, take care, and I'll see you soon. Bye bye.